All right, the markets are open here on a Wednesday. I'm Marlon Bowling, your tour guide to the ag commodities. Let's dive in, shall we? Let's see what is in the markets with quotes provided by Bar Chart. Let's go to the corn, and on the big board, we go to July, the front month. Right now, it's trading 4 cents higher. We're at 581.5. So that's about 7.5 cents off of our earlier low from overnight. Now, in the December corn, we're trading 2.5 cents higher at 519.25. So far, so good, right? If you look at the soybean trade, well, we have July now up 7.25. We're at 13.29.75, and that's within a penny of our high of the day. And November, the new crop month, now 2 higher at 11.8975. That's just a penny and a quarter off of her earlier high here this morning. And you'll note that the nearbys are gaining on the deferreds once again. Kind of a bullish signal right there. Okay, now you get to the wheat, and this is where the adventure begins. Now in Chicago, you have July down 9.25 today at 613. This market is really hard to figure out, especially Kansas City wheat. What's with that? July down 16.75 today at 824.75. It was as high as 844.75 overnight, and now we're 20 cents off of that. Good grief. Looking at spring wheat in Minneapolis, you have July down 9.25 at 811.5. Well, let's bring in Brian Hoops, and he's the president of Midwest Market Solutions. He's in Springfield, Missouri. What did the wheat do to the trade to make it so angry anyway? It has been relentless selling ever since the wheat tour anyway.
Yeah, it seems like, Marlon, we rallied during the wheat tour, anticipating we were going to have some poor yields, similar to what the Oklahoma Wheat Commission tour found. We rallied sharply into the end of the results of that tour. Once they were released, boy, it's been a downhill slide, about $1 loss in 4 sessions. Then the market had about a 20-cent rally yesterday on very little news. Today, we're giving all of that back, again, on very little news. It's a wide swinging market. Without really much in the way of fundamental explanation. You know, the corn and beans are kind of caught in the crosshairs. Tomorrow is actually a prevent plant date in North Dakota. Our office up there in North Dakota alerted us to that fact that there's about 2.5 million acres of corn that is expected to be planted that may not be planted next year, especially with these input costs very high. And if they do have livestock, they certainly could take the prevent plant option and plant some other small grain and feed that to the livestock and kind of get the best of both worlds. Or we may see some acres shifted over to soybeans. That's certainly a possibility as well. And that would support the new crop corn and probably weigh on the new crop soybeans a little bit. So there's kind of a more of a fundamental look at the corn and soybeans and doing what they're doing. But probably one of the things here, the biggest thing is weather after we come back from the Memorial Day holiday, is what that weather is going to give us for longer term rain amounts. It's fairly dry across the country and probably will be until next week. Then there's a chance of rains. But if those rains in the longer term don't materialize, we're going to go a long stretch with some very dry conditions and very little subsoil to draw off of.
Well, I did actually see a post on Twitter this morning, and I know it's kind of a stretch and it's an isolated case, but there was a post with some pictures of safrinha corn in Brazil that was severely tipped back because of dry conditions there, that it didn't get the moisture it needed. I don't know how widespread that is, but that caught a little bit of attention too, I think.
Yeah, you know, because they've had such a drought in Argentina, the concern is that drought extends into parts of Brazil and the safrinha corn crop. If that would happen, and that's probably a big if at this point in time, because we haven't really heard any private analysts downgrade the crop in Brazil, it's going to leave the door open for some U.S. exports. So China's been, a pretty good buyer of Brazil's corn crop, and they've been canceling as of late U.S. corn purchases. They could come back to the U.S. right away if in fact that does materialize, that they have a shorter crop in Brazil.
Lots of stuff in the mix this week. All right, Brian, sit tight. We'll come back in a moment and we'll take a look at our livestock trade and open things up here on a Wednesday. All right, now let's take a look at our livestock trade here on a Wednesday and see what we have for surprises, if any, today. All right, here we go. On the live cattle, you have the June contract 42 lower at 163.85. Well, this seems like a repeat of what we had earlier this week. August down 50 at 162.07. Well, not much going on there. A little bit of a softer tone. On the feeders, well, we have triple-digit losses everywhere outside of the May. We have August down $1.40 right now at 232.07, and that's over $1 off of its earlier high this morning already. And September dropping $1.47. That's the biggest loss here. It's at 235.27 right now. Drum roll, please. Let's look at the lean hogs. What are they doing today? Shazam, they're higher. Look at that. June lean hogs. I need to take a picture of this screen. June is up 7 cents at 80.75. July up 20 cents at 81.17. Wow, I didn't know you could have a plus sign across the board on lean hogs anymore, the way it seems, Brian. So let's talk about that for just a second here. Lean hogs, that's kind of a meager attempt at a rally.
It's meager, but at least we're not down a couple dollars like we have been almost every other morning during the trade. So fundamentally, again, lean hog index is still below where the futures are, but it did rally a little bit, about a quarter or so in the last couple days. So it's it's not out of line any longer with where the June hog futures are at. We're around 79.50 or so at that index, and so again, not out of line. The hog weights that came out this morning did show weights dropping down to 284 pounds. So it's a good sign that we're not putting weight on. We're taking weight off of the marketplace. We're about 2.6 pounds below year-ago levels. So again, that's less tonnage hitting the market. That's somewhat fundamental for this marketplace. But again, it's a heavily entrenched large speculators being short in this marketplace. They need a reason to cover those shorts if we're going to have a major rally here, which is badly needed in that hog industry.
All right, Brian, we all know that anytime you get toward the end of the month and you get toward a 3-day holiday weekend, some funky things can happen.
Absolutely. And we're probably going to see something like that in the cattle market. We're seeing some weakness in the feeders because of the higher corn market, stock market down today because the debt ceiling talks are kind of stalling out. I think it's weighing on the cattle. Plus, we're likely to see these cutout values decline a little bit going into the Memorial Day holiday. So it seems like Packers not really any hurry to buy cattle, but we are seeing some bids surface around that steady money in the Southern Plains and steady or so on a dress basis as well. So the bids are out there for steady trade at least this week, and hopefully the futures can hold in there. But like you say, it can get kind of crazy because it's the end of the month and a 3-day weekend coming up.
Yep. It's kind of a double whammy this particular weekend. All right. Thank you, Brian, for joining us today, and best wishes for a good holiday weekend out there. No trade on Monday. Brian Hoops with us. He is with Midwest Market Solutions in Springfield, Missouri.